How's it going? I'm Ryan. Today, I'm going to go over a few trades that I took on MNQ. Had a winning day overall. Started the day with some losses. We'll get into those in just a second, but for now, I want to take a look at just like a daily and hourly chart and see what I was looking at. Just going to go over NQ. I did chart ES, but I did not take any trades on ES, and I'll touch on that in just a second as well. So, on NQ, we're looking at the daily chart, kind of the main zones I was watching. Right through here was the big one that came into play around like 19,911 to like 19,873 or so. Reason being, we have the close or pretty much the height of this long bullish candle here. We have a bounce, kind of the low of a day here, low of a day here, bit of a low of day here. Same thing here. Just a lot of wicks in that area. Both as resistance and then once we broke above it as support. That was really the only thing that came into play. All my trades kind of revolved around this zone. And then we had, this kind of double bottom down here we were watching. We also watched this zone up here. Reason being, we had some support here, broke below it, resistance, right? And then this zone up here, which also didn't come into play. We had Friday's high and low marked by these green and red levels. And then we had, I just put a horizontal level up here for the all-time high. And then we had some pre-market levels that are like these yellow orangish areas. But let's take a look at what that looks. Didn't mean to do that. Let's take a look at what that entails on the hourly. So see a little bit better here on the hourly. We have kind of this zone down here where we bounced a lot. This down here is that double bottom that we saw in the daily. We have pre-market high and low. Friday's low and high, respectively. So that's where we're at. Game plan coming into the day was watching for bounces down here, projections up here. Pretty much, really, that was it. I didn't want to get caught in the middle of this range. Kind of rangy. Not too many great like trend days. We kind of got a bit of an uptrend at the end of the day today, but if you look at the morning, you can see that we were pretty choppy, right? Not really doing a whole lot in terms of defining a trend. It was down, up, down, up, down, up. So just trying to catch some swings around this zone. That being said, we can take a look at ES just real quick. Same thing, right? Some resistance here turned to support. We were watching that. Friday's high and lows, pre-market high and lows. This resistance zone up here that we had a few daily wicks off of. That's really it. So like I said, didn't trade ES. And before I even jump into it, I'll say why. It's because ES was kind of just chopping around in this pre-market range. It finally did kind of dip down into the zone where I'd be watching for a bounce, and it did bounce. So there were some trades similar, but I feel like I kind of like the price action in Q a little bit better. You get better, more consistent moves, more likely to get a bigger move, I'd assume. All right, let's take a look. I'm gonna pull up the 5,000 tick chart and we'll just go over the trades I took, and then we'll look at those on some other time frames as well. Like I said, high and low pre-market. We start the day kind of right in the middle of that range, so I'm not interested. Only interested once we come down into the zones that I'm watching for a bounce. So that's something that I'm trying to implement. Full disclosure, last Friday I had a bigger losing day. It was like $300 something. It was a little bit of a tilt. I had a losing day. I decided to take one more trade and size up, and that ended up being a losing day, which brought me to a higher loss than, or a larger loss than what I would typically allow. Today we made some of that back. We're up a little over 160 today, so down about 150 exactly, 149.13 cents or whatever. But accounts down about $150. Not bad. We'll take it. The goal is just to survive and just figure out what works. I'm still trying to kind of toy around with things. Haven't had the best discipline in terms of taking trades and cutting losses and etc. So for me to be just hovering around break even, that's okay with me now. We're just continuing to try to tighten things up and improve. So one of those things I was trying to do is to every single morning I will be marking these zones, start at a daily, move my way down, and just make a game plan in terms of like where I will take a trade, where I will ignore it. Reason being, like in here, you can get caught up in that chop in the middle of the range. It's much safer or higher probability to take trades at larger levels. So that's enough of that. Let's get into it. So off the rip, we had a quick little pop and then pretty aggressive sell-off. When we were coming down into the zone, this is where I was watching for bounces at the top or the bottom of this zone, or just kind of within this blue zone in general. We came down, we looked like we were going to hold right here, and I took calls. I got stopped out, so I took calls, put my stop loss below that low a day. This wicked me out, but then it looked like it was going to kind of recover, so I re-entered, and then this stopped me out. So I took 2 quick losses trying to re-enter that trade in the morning, but let's take a look at why I wanted to trade there or take a bounce there. So we've seen that we've had some pretty big bounces in that area before. And then I was also watching this time frame where we had some multiple closes holding that level, kind of having those longer lower wicks. And excuse me, but I will pull this up. And then on the lower time frame, we were forming some hammer candles, right? That momentum, we had some pretty big red candles coming down, but that momentum slowed. And then we had some green candles. I mean, trying out this cumulative delta indicator, it's the only indicator I use. First day I was using it, but I saw that, and this represents, the green and the red represent selling market orders and buying market orders, and the size corresponds to the amount of orders within that candle, if that makes sense. So seeing it come down to this level, seeing those sell orders really slow down and start to shift into buying, gave me that confidence to enter here. I like that setup. I'm not mad at it. They don't always work out. So I got stopped out. It looked like we were going to hold. So I put my stop loss below that wick, just barely got stopped out. At this point, I re-entered because we formed another hammer, but then was quickly stopped out there. So two quick losses right off the bat with 5 contracts. And I was down like 180 or so on the day. So not great. Not a great start to the day. But we bounced back. So my second trade was in here. We came down and we started to form a little bit of a double bottom, right? We formed this low, form a little bit higher low. We're forming some hammers, some lower wicks on the higher time frame. And so I entered a long position here. Now I was targeting this top of this little swing right here, kind of this wick that you see, and I didn't take the full move. That would have been about a 30-point move, and it would have been really, really nice. We swung up and we did hit that. But we did have news at 8 a.m. And I got out somewhere in here a few minutes before, just because I wasn't looking forward to holding into news. And oftentimes when news is coming out, the few minutes leading up to it can be kind of low volume and choppy. So I was up about like 11, 12 points or so, and I just took that. Like I said, could have got the full 30 had I held, but a win was a win. So entered down here, and that was because, like I said, we formed this low, and then we formed a little bit of a higher low. I also noticed that the cumulative delta was trending up, right? So if you compare it to where we are here with price action to where we are here with price action, the cumulative delta is making higher highs. It's made that low and it started to break that swing high, but we weren't getting that on the price action. So that indicated to me that there's a bit of a bullish divergence, that buyers were stepping in and were very present down here. So that's kind of what the cumulative delta shows, is just the presence of buyers and sellers, the size of those buy and sells, and can kind of give an indication to areas where we might bounce or reject. So I was watching this area. We made a slightly lower low than what I was expecting, but nonetheless, it's just the same kind of idea as catching this long here. This one didn't work, this one did. So that was my second trade of the day. My third trade of the day came up here. It got a little bit choppy, but I was watching this top and bottom of this zone for bounces, right? And you can see how many times we've both wicked off of it as resistance here and here, support here, 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 and here and here and here previously. Friday's low is right there. So the fact that we made this bottom, had a really aggressive push up, and then came down and tested and held this Friday's low and the top of this zone that I was watching for a bounce, I entered a long position again. And I entered it right around that yesterday's low. I should say on this trade, my stop loss was below low a day. So uh, that was my risk low a day, and I was aiming for kind of swing high. So it was about a 10-point stop loss for a 30-point take profit, but I did take about 12 points, so it was a little over a 1-to-1. But ideally, that would have been about a 3-to-1 trade there. For this one, I just put my stop loss below this wick here, kind of right around in this general area. Same thing. It was about a 10-point or so. I think it was like 9 points. I generally try to keep my stop loss around 10 points. I don't want to usually give it a whole lot of wiggle room. Ideally, if I have a good entry, a 10-point stop loss is enough to avoid getting stopped out. So my stop loss was right in here, below this wick. We got close here, but we didn't hit it. My entry was right around Friday's low, so kind of right in here. And I entered once we had broken above and held on this higher time frame here. So I entered somewhere in this area in here after we had those consecutive closes holding that. My target was just above this little range. Actually, this candle hit my take profit. I didn't set it necessarily. I used a bracket, and that bracket has a 15-point take profit. So you can see I entered somewhere in here. I can pull it up, and that 15 points was just kind of at the top of this range. So kind of bounced around a little bit. I'm not gonna lie, this horizontal action was making me a little nervous because I thought that after that strong recovery and holding of this level that we would maybe get some continuation. But it did hit my take profit and then immediately sold off. So I got a little bit lucky on that one. But this third trade put me up overall. So had 2 losers, a quick win here, and this had me positive for the day at this point. I took a 4th trade, and my 4th trade with the break of this low. So you see that we had the day's low, we came down, we formed slightly lower low and got a little pop, and then we aggressively sold right through it. So I took a short position once we broke that low of day. So on this candle here, once we broke through, reason I did that is because of this cumulative delta. We had a very bearish candle, right? We had a little move up, and then we had a huge bearish engulfing, but that wasn't really represented on the cumulative delta. And the cumulative delta represents market orders. It doesn't encapsulate limit orders. So over the weekend, I was watching a video of cumulative delta, and this guy was explaining his method that he likes to find reversals is to watch where you get an engulfing candle on price action, but where it's the opposite in cumulative delta. And his reasoning for that is that it shows that there's a large amount of limit orders in that area that aren't being picked up by the cumulative delta, but the price action is telling the story. So we were weak on the day, right? We sold off, had this little swing high, broke lower. So overall, it looked like we were pretty weak. That also played into it. We were definitely weaker than on the day. So I was just kind of playing that. Same thing, I just took it on the break of the low. I just used my bracket. It was just a quick scalp. So I had about an 8-point stop loss, 15-point take profit. We moved down and hit my take profit. So this I sized down on. I only took 2 contracts here because I was already up on the day, and I usually don't take breakout trades. So I was willing to risk like $30 to make 60 at 2-to-1. That's about what I was risking. 30 with 2 contracts, 60 take profit. And so I sized down on this because normally I don't take breakout. I like to see a break and retest or just like bounce or a rejection. So sized down for this one. Didn't want to take a ton of risk, but it did work out. And then my last trade was... Oh, I didn't mean to do that. That's a bummer. All right, my last trade was somewhere right here. Where did I took a long position. I'm trying to find exactly the moment I entered. I missed this whole run up. That was really nice on the 5,000 tick. We got those 2 hammers holding there. Same thing, right? We get that divergent or that bullish engulfing here on the price action, but we get the opposite on the cumulative delta. You see how that green candle's smaller than the previous red. So that was the strategy that I was learning about, and just looking at it, it works pretty well. Obviously, you pair that with like higher time frame levels, areas where you expect a bounce or a reversal, and then you wait for that confirmation on a lower time frame with the cumulative delta. So that was really nice, and it played out really well, but I did not capture that. The move that I captured was, that's right, it was in here. It was a single contract. So I was up on the day. I sized all the way down to one contract, and I took a long position here. Same thesis as this, right? We broke back above it, held it, so I entered a long. My take profit was 30 points. I was willing to hold this contract a little longer because I only had one, so I wasn't going to trim along the way. And this was really just something that I was hoping would take off and be a bigger winner. So I put my stop loss below this low here. I was only risking, maybe 8 points. Take profit was at 30 points, somewhere up in here, and we moved up and hit that. So kind of same idea as this second trade, or I guess it was the third trade that I took. Is just watching for us to hold this zone in here. That's it. That was it for the day. This one would have been an absolute banger had I taken it with a little bit more size. Like I said, I took one contract. I hit a 30-point win. That's $60 on a single contract. Had I done that with my usual sizing of 5 contracts, that's $300. That would have been spectacular. But nonetheless, I was up on the day, and I didn't want to give it back, taking too many trades. So I was willing to lower that contract sizing and then just go for a bigger win. That's all I got for you. Like I said, I'm going to be trying out this cumulative delta. I seem to like it so far. It just adds like another layer of confirmation. But looking to be a little bit more disciplined moving forward, be a little bit more involved in paying attention to exactly where we are every morning, and then executing only where I think we'll get good price action. With that said, thank you for watching. I do trade live Monday through Friday, so I'll be here all week. If you want to stop by, please do so. I'd love to have you. Hope you have a great rest of your day. Peace.